break from mediocrity. BFM 89.9.
It's 8:49, Wednesday, the 6th of August, and you're listening to The Morning Run. And in about 15 minutes, of course, we've got the FBM KLCI opening, as well as an outlook on the tech sector. But in the meantime, let's talk about Malaysia's trade ties with the United States. Because to ease trade tensions with the US, Malaysia has committed over $240 billion worth of deals, a move that reportedly helped us avoid the threatened 25% tariffs, with new duties now set at 19%.
Among the headline agreements are a $19 billion aircraft purchase by Malaysian Aviation Group, long-term LNG supply contracts by Petronas, and tech investments involving multinational companies operating in Malaysia.
And according to the Minister of Investment, Trade and Industry, Tengku Dato Sri Zafrul Aziz, these deals are part of long-term business plans and don't compromise national interests, including Bumiputra equity requirements. Are we placing too many eggs in one basket by increasing our reliance on the US market? And how do these deals align with Malaysia's broader economic and foreign policy goals?
For some insights, we speak to Dr. Carmelo Ferlito. He's the CEO for the Center for Market Education. Carmelo, good morning, and thanks so much for joining us and speaking to us again. Now, like we said, Malaysia has committed over $240 billion in deals. What does this indicate about Malaysia's current trade strategy and its broader economic priorities?
Hi, good morning, and thanks for having me. Let me start with a couple of clarification, because all this story starts from Trump's misconception that trade deficit is bad per se. So I think that if you want to be precise, I mean, trade deficit can be bad, but can be also the sign of strong purchasing power. So that's where the story starts. Second, there has been some exultation, some happiness about the reduction of tariffs from 25 to 19%. But tariffs were actually never reduced because they were never 25%. They were threatened to be 25%. It's a little bit like when you are a salesperson, you want to strike a deal at a selling price of 80, but then you go to your customer telling, listen, I sell at 100, but you are happy bringing home 80. So you start high to go. So in this, commercially speaking, from a business perspective, is a big success for Trump. See really the business person there. Of course, not a success for the United States, but for Trump himself in terms of his own strategy. Then I was looking a little bit at the numbers of this deal, 240 billions. So if we look at Malaysia trade for 2024, the total amount was around 680 billion American dollars. So this means that the trade, the agreement that was stricken is equivalent to 35% of total external trade of Malaysia, import and export together. And if we look at 2024 trade surplus that Malaysia had with the United States, it was around 17 billion American dollars. So it means that the agreement is around 13 times higher than the surplus. So let's say that is quite a commitment. But I also want to add another thing that may be actually the elephant in the room in the implementation of this deal is that actual trade agreements never happen between governments, but they happen between firms. So governments may commit to do this, to do that. Will later on businesses follow this commitment? Of course, one thing is to deal with government-linked companies or sovereign funds like Khazanah, but a different matter is when you deal with private companies on the ground if they want to follow suit.
So if you looked at the trade surplus that we have with the US and what we've given in terms of our commitments, would you say that Malaysia has secured a fair deal, or have we given too much to get this 19% tariff rate?
Well, it seems that we are given a bit too much. Is a big deal. Of course, there may be some secondary or indirect benefits there, which I'm unable to see now in the short-term analysis, but is surely a huge commitment.
So, Carmelo, one of the headline deals that was mentioned was Malaysia Aviation Group's purchase of $19 billion worth of Boeing aircraft. I'm just curious whether this is a commercial decision or part of a strategic concession to ease trade tension with the US, because PM Dato Sri Anwar also said that it involves the US, Boeing manufacturing, doing the manufacturing in Malaysia as well. Could you help us contextualize this?
Well, you see, I hope that before reaching this agreement, there was from the Malaysian government also an engagement with the stakeholders on the ground, because this is, again, an important commitment, not only for the purchase of the aircrafts, but also for the local manufacturing. So it's not easy to set up local manufacturing. It requires labor, which Malaysia struggle to have. So I hope that an engagement that makes sense from the commercial perspective was done, and it was not just, let's say, a sort of political agreement.
Carmelo, MITI minister said that there were some red lines that were not crossed to obtain this 19% tariffs. Do we know what these were, and how important are these non-trade barriers to Malaysia's own development?
I think that if we look in general at the situation of international trade nowadays, in many perspectives, non-trade barriers actually tend to be even more important than the non-tariff barriers, tend to be even more important than tariff barriers per se. I know also if you look at the negotiation with the European Union, Malaysia has a few points that don't want to be crossed, but these are mostly related to the structure of capitalism in Malaysia, to certain internal differentiation in the country. And I believe that I don't think that these points are necessarily economically meaningful, but I think Malaysia will go until the end to preserve those points.
So if we look regionally, our ASEAN neighbors like Indonesia, Philippines, Thailand, they're also at 19%. How should we interpret this, and what does it mean?
So this has been, standardized approach, and again, it is, I think, a commercial strategy victory for Trump, where Trump entered the negotiation room with big numbers for everybody, and then it exited the room with a standardized price for everybody. But these duties are actually disadvantageous for ASEAN countries, so with economies that are mainly export oriented. So in the short run, I think Trump has somehow brought home a personal victory, but ultimately all the world economy will suffer for this. Not only Southeast Asia economies that will struggle to export, so this will reflect somehow in less trade opportunities. Less trade opportunities means lower production. Lower production means less employment for Southeast Asia. But the same can be said for the United States. So in the long run, less occasion for trade means less availability for products for American consumers, and I don't see an automatic translation into American production at this point. So I think we will see in the medium run bad repercussion on the world economy.
Okay, so now that we've got this all sorted out, so to speak, how does this affect our trade and investment balance with the other major partners like China, the European Union, or even within ASEAN ourselves?
So ASEAN and China remains important markets for Malaysia, despite the United States was still in 2024 the biggest export market. But I think that I want to re-stress this point that I made at the beginning. Obviously, Malaysia, like other countries, is pushed for diversification, and this is important. And we see the strategy, in example, with the European Union, both in Malaysia and Indonesia, very aggressive at this perspective. But we should not forget that ultimately trade is always between firms. So if at a certain point an American company is buying a product from a Malaysian company, and because of duties, these Malaysian products becomes more expensive, then the American company will have to eventually try to find, and not necessarily will find, an alternative supplier. And at the same time, the Malaysian company will have to find an alternative customer, and not necessarily easy to find. So there is a micro reality behind the trade agreements, behind trade numbers, which is done of daily business situations which do not change overnight. If tomorrow we do an agreement at 0% on everything with Europe or with China, then it's not just that our trade will skyrocket with these regions,
All right, thank you so much for your time. That was Dr. Carmelo Ferlito, CEO of Center for Market Education, helping us make sense of the trade deal that we just signed with the United States. Up next is, of course, the 9 a.m. news bulletin, and that's going to be followed with International Market Insights with David Chow, Director of Azure Capital. Stay tuned, BFM 89.9.